Bloomberg Audio Studios. Podcasts, radio, news.
Or no Mercedes.
Paul Sweeney and Tom Keene. What we're going to do is talk to Mike Mayo here with Wells Fargo. Mike Mayo is absolutely legendary in banking. He's one of the few people that Congress called upon in the great financial crisis to say, what in God's name is going on? And it has finally paid off. His optimism on large cap banks in Europe and, of course, here in America. I have a chart of Citigroup with a 10-for-1 reverse split, cratering from, down it went, and then it just forever. And finally, a legitimate leg up. Let's start with that, Mike Mayo. Why is banking finally getting a leg up?
Well, the times, they are a-changin'. And you're seeing historic inflection in terms of the revenues, the earnings, and especially 15 years of regulation going from a headwind to a tailwind. Now, I'm not talking about going back to 2006, 2007, before the global financial crisis. I'm talking about preserving the safety and soundness of the banks and eliminating a lot of red tape. And that can help banks operate at a lot higher profit margin to help their stock price.
Is it operational excellence or is it the gift of the yield curve?
It's really more just operational streamlining because regulation has gotten so complex. Pull back that complexity and banks can perform better. But yes, you've had 15 years of financial repression. Zero interest rates were disturbing to banks' profitability. Now you're going back, just back to normal.
So talk to us about how you think the regulatory framework may change and what it can do to returns on equities, for example.
Well, I think the regulatory framework was vastly improved after the global financial crisis. Banks doubled capital. They doubled their liquidity. They de-risked with their consumer customers. Remember all those subprime loans? Yep. They de-risked their commercial customers. If anything, banks have been marginalized to the benefit of the non-banks. So a lot of the more risky stuff has gone outside the banking industry. So I would say great job regulators from the year 2010 through, call it 2015. But the last decade, you had complexity piled on top of complexity. The living will, the Fed stress test, JPMorgan submits 80,000 pages for each. Jeez. And, I talked to the ex-vice chairman of the FDIC. He said he didn't understand it when he reviewed it, and nor did a lot of the banks. So it's a lot of wasted money. So I think you can save a lot of money on expenses at the banks, at the regulatory agencies, and I think some of that gets passed on to the customers. And also, banks deserve to have a level playing field when it comes to how much capital they have. So compute those capital ratios the same way you do for everybody else, and the numbers go up by quite a bit. So this could improve banking returns by 200 basis points over a few years. That's significant, and that can propel a bank stock rally over a few years.
So are there certain banks that are better positioned in this type of environment, or is this a blanket call on U.S. financials?
Well, a rising tide does lift all ships. JPMorgan remains best in class global bank, but my favorite, number one, number two, and number three favorite is Citigroup. I was on your show last year, and it's moved. It's starting to move, but it's still my dominant number one pick. It's a new era for banking, but it's also a new era for Citigroup.
I've got a chart normalized. We're going to talk about this, folks, with Mike Mayo here at Wells Fargo as we go into the next half hour. I got a chart normalized back to the day Lehman collapsed. I think I maybe talked to you that day. I can't remember. I got a JPMorgan moonshot. When you say banks are going to do well, are they catching up with JPMorgan, or is it all boats rising even for JPMorgan?
I'd say both. So I think the lesser banks will narrow the gap with JPMorgan for sure. But at the same time, JPMorgan should continue to improve. Okay. What a bank, generating over 20% returns on 15% capital with some best-in-class efficiency.
Okay, Mike Mayo with this. So I got JPMorgan, clearly way ahead. 317,000 employees is the working number we've got in the DES screen. There's all this, the stuff Chanelli Bassick talks about, all this OMG, who's going to take over for Jamie? Does that germane to you? Is that part of your analysis of JPMorgan, or do you just ignore the people moving around and just look at the financials and the execution?
Well, I think Jamie Dimon I asked him this question in the last earnings call. I said, Jamie, who's your successor? And he didn't give much of an answer. And
He's been doing that for 10 years.
Well, then I finally said, so are you going to be around for a few more years? He said, yes. So I think when you have this many moving parts, Jamie's not going anywhere in the immediate term. Having said that, there's a deep bench at JPMorgan. It could be a number of 3 or 4 different people. Marianne Lake certainly is the name that comes to the fore. Investors know her. She's held a lot of positions. But if Jamie stays on for several years, it's, we'll see what happens. No, I'll say this.
Yeah.
A couple of years ago, I downgraded JPMorgan when they were spending all kinds of money without telling us why they were spending it and everything else. Then I upgraded it, made it my number 1 pick after the failures from a couple of years ago. But not one investor that I've spoken with, and I've traveled a lot the last 2 months, not one investor that I've spoken with wants Jamie Dimon to leave.
Yeah.
So people want Jamie Dimon to stay right now. And so I think he should get that message and stay. And he's been playing for this moment. I call it re-regulation, not deregulation, re-regulation, making more common sense regulation. And he's going to benefit. JPMorgan's going to benefit. Why leave now? You've been waiting to go to the ball game your whole professional career. You're finally getting there. You're not going to leave before the first inning.
Get one more in.
Citi. I'm a former employee there at Citi. When I worked there, I felt like there's not a piece of business we couldn't win. What happened to Citi, and why is it now your number 1 pick?
Well, look, compared to the time you worked there was a dramatic shift last year that's underappreciated by almost everybody. They went from 5 decades of this global matrix management structure that nobody understood, and now they have 5 lines of business. They have payments, banking, markets, wealth, and consumer. But they have a CEO in charge of each. They have return targets for each. They have accountability for each one of those 5 lines of business. That's what you're playing for the next 5 to 10 years. But at the same time, they're at that flexion point of the J curve. You invest money and your profits go down. They're turning up on the other side of that J curve where those investments start to pay off and they start spending less. So you're going to see twice or maybe 3 times better efficiency improvement at Citigroup and return improvement at Citigroup than the other banks. And by the way, they're passing this magical line where they have single-digit returns to double-digit returns. When you do that, you go from value destruction to value creation. That is the number 1 biggest driver of bank stock performance. It's the number 1 big bank stock performer so far this year. I think it'll be the top performer by the end of the year.
Michael Mayo with us there on Citigroup, and we'll continue. He is, of course, large cap bank research at Wells Fargo. Fairly to say, legendary in the also very cut and chiseled.
Yeah.
He's like, he said to me, Tom, you got to hit the weights again.
Got to hit the gym, Tom. Come on.
He's like, Tom, get in the gym. Thank you, Mike Mayo.
On your Citigroup pick, I'm fascinated by this. Now it's all coming back to me. I walked out of the door of Citi after a few years, sold all my stock literally on the day I walked out the door.
Very cool.
In January of 2000. Jane Fraser, I think she's got a pretty good message for the street. How is she different from other CEOs at Citi who have also promised change and to clean things up and to streamline things?
Oh boy, you're triggering me right now. As I think of the other CEOs. If it goes back, Tom Keene probably remembers Walter Wriston, right? Countries don't go broke.
My father knew him personally. They used to talk farms in awe. He worshipped Walter Wriston, and then it ended.
Yeah, let's lend to Latin American countries, they'll pay us back. They did in 1987. You had big charges. Then you had John Reed back in the early 90s. He had the Saudi prince, had to pump it up with capital. And then you had the whole Sandy Weil era that came later. And then you had long-term capital with the problems. And I call that Noah's Ark because they brought 2 of everybody along with the big mergers with Travelers. And then you had Vikram Pandit, which... first you had Chuck Prince, the lawyer, and remember, he's going to keep dancing until the music stops, and that ended very
Then the music stopped.
And then the music stopped, and basically they effectively failed, and the government bailed them out. And then you have Vikram Pandit, which was kind of there, and then you had this guy, Mike Corbat, who didn't change the strategy at all. And through it all, I'd say Citi was very arrogant. Very arrogant. Jane Fraser gets there and says, you know what? We have a lot of problems. We have a lot of things to fix. The first step is to recognize that you have a problem. And it's taken a little bit longer than some people would have liked. I understand that. And the expenses are a lot higher than they should have been. But recognizing a problem. Then last year, everyone said Citi's going to mess up. three concurrent initiatives. One is this org simplification. They went from their 5 decades of matrix structure, 5 lines of business. They eliminated 5 management layers. They told all the employees you're going to have to manage more people. It was gut-wrenching, and they fired some people, and that's always tough. And then they're divesting, over a dozen consumer operations in a dozen countries outside the U.S. And then they have this transformation, the back office. They're doing this all at once, and everybody said Citi's going to implode. Well, guess what? Last year, Citi met its efficiency targets. They beat their revenue targets. They met, and so going through those major changes. So people say, what's the proof? What's the evidence? Look at the results of last year and their guidance. 3 years in a row, they're now guiding, if you believe them, revenues going higher and expenses going lower. So you're at that huge inflection point now. So they're recognizing they have a problem. They don't have that same degree of arrogance. They have the ability, they have the capability. They're in 100 countries. So if you're a global multinational corporation, you want to do payments or global investment banking, you got it. They're top 3 in credit cards. So they have the franchise, a new strategy, and Jane Fraser as the ultimate architect of where Citigroup should be the next decade.
You are more qualified on this than anybody I know on the sell side. The great group of sell side analysts that are out there. Jamie Dimon this weekend was the talk of the weekend with some tape that was, out of JPMorgan and that. Mike Mayo on work from home.
I loved the Jamie Dimon video, the audio that got leaked out to the press, and that's vintage Jamie Dimon.
It is. I agree with that.
He just said he's going to say what he thinks, and he says, if you don't like it, don't work at JPMorgan. We want you to work at JPMorgan, but if you need to work in the office so you can mentor people and everything else. And for JPMorgan and Jamie Dimon, that works, and that's their strategy.
Come on, when you were at Credit Suisse, you had mentors as you built your career. You went from, the day you got canned at Credit Suisse, I think I spoke to you that day or the day after, whatever. The answer is you need mentors. Mike Mayo on work from home. Talk to the kids right now.
But I'd also say it's not one size fits all either. Okay, so there's different departments at different banks.
Different departments, but come on.
Different departments, different banks. I will say, though, Jamie Dimon and JPMorgan, it's worked for them. They came back early during the pandemic. Goldman Sachs, that was actually my first meeting at Goldman Sachs. I wasn't going to go in. And my wife's a doctor, as you know, and she says, no, you're going in to meet with them in person. Okay? And I went to Goldman Sachs, and I'm telling you, they have this middle area where you have to transfer to the upper floors. And it was almost packed, and this was at a time no one was going back to work. So the JPMorgan and Goldman Sachs, they had they had so many employees back early, and look at the most successful, best-in-class firms. You want to weigh in on this,
Paul? Paul gets fired up.
But it's not one size fits all. So if Citigroup decides they're going to allow some people to work remotely, that might be a competitive advantage in hiring certain people. So I'm saying
computer people, I get it.
Well, just sometimes you can get great people if you make some accommodations. So Jamie Dimon's not of that,
We got Lisa Mateo. I mean, that's the way it works.
Hey, Mike, talk to us about Bank of America. Again, a former employee through Merrill Lynch. I've worked pretty much everywhere. Talk to us about the Bank of America story. Sometimes that gets lost a little bit between the Jamie Dimon talk and maybe the turnaround at Citi. What's the story at Bank of America?
Look, we have 3 words that sum up the largest banks. That is, Goliath is winning. Okay. Scale is making more difference in banking than ever before in the history of banking.
Why don't you tell the European regulators that? I mean, because they've lost.
Absolutely lost. The 5 biggest U.S. capital market players, Bank of America, JPMorgan,
Goldman, Morgan Stanley.
Morgan Stanley, and B of A.
Yep.
They've gained market share in capital markets since the global financial crisis, in spades. And I think they'll continue to do so. And talk about twice or 3 or JPMorgan 4 times larger than the European bank peers. And by the way, this whole idea that U.S. banks should not merge, that's like the Brian Moynihan or Jamie Dimon Protection Act.
Right.
Why do you want to protect them? You should have more large banks. PNC, Bill Demchak talks about wanting to have another $1 trillion bank. He'd like to be that. But the unintended consequence of regulation for the last decade.
30 seconds. Do you have a regional right now you would own around that Mike Mayo theory? Do you have a regional that could be mergeable with the people from Pittsburgh with their beautiful baseball park?
Look, If you want a name to own, it's Citigroup, it's Citigroup, it's Citigroup. I don't want to dilute that call.
But it's a compliance risk.
We're waiving all portfolio limits, okay? But it's really Citigroup, and then look, and JPMorgan and Bank of America. Those are the three Goliaths. They benefit.
You're not even going to look down in
look,
Gerard Cassidy's territory.
Look, PNC is a quality bank. They're the national Main Street bank. They're in the 30 largest cities. They have a 10-year runway. Bill Demchak is an exceptional CEO. And they should have revenues growing far faster than expenses, and they'll benefit from the rising tide that lifts all ships. But again, for me, it's Citigroup is my primary recommendation.
Mike Mayo, thrilled to have you in today. Thank you so much. He's with Wells Fargo, folks.